I'm interested in silver precisely because it's disappointed people. I'm interested in silver precisely because your audience, who probably had some expectations around the year 2020 around silver, was disappointed. I'm interested in silver because it's unpopular, it's out of favor, and it's regarded as dead in the water.
Rick Rule, a seasoned investor, expresses a keen interest in silver despite its recent disappointments and unpopularity. He sees potential in silver precisely because it has fallen out of favor, making it a prime opportunity for contrarian investors. Rule emphasizes the historical volatility of silver, especially during precious metals bull markets, where silver tends to outpace gold in terms of movement. Reflecting on the dramatic price movements in the 1970s, Rule notes that silver stocks can be even more extravagant than the metal itself. He advises potential investors to approach silver and silver stocks as speculators and contrarians, highlighting the potential for significant gains in the arbitrage between being hated and unheated. Rule also points out the unique supply dynamics of silver, with a significant portion coming from mines that primarily produce other metals like copper, gold, lead, and zinc. Despite the challenges in forecasting silver mine production based solely on silver prices, Rule believes that understanding these dynamics is crucial for investors looking to capitalize on silver's unique position in the market. Overall, he positions silver as the number one asset, presenting an opportunity for those willing to navigate its contrarian landscape.
Obviously, buying things when they're hated and enjoying the arbitrage from hated to unhated is the easiest money that's made in speculative markets. And the fact that from a speculative point of view, silver is dead in the water, and from the point of view that it has disaffected so many people who were attracted to it in 2020 and 2021, is precisely the reason why I'm attracted to it. Now, let's get around to the basics of your question. Why silver? Silver is the most volatile, I would suggest, of the precious metals. I'm defining the precious metals to be gold, silver, platinum, and palladium. Silver traditionally is a second half mover, meaning in precious metals bull markets, the markets are generally led by gold. Once the trend is established and the narrative is established, silver, for whatever reason, and I'm not sure of the reason, perhaps the lower unit cost, moves further and moves faster than gold. My first attraction to silver, of course, came in the decade of the 1970s. The cause for that attention was the fact that the silver price moved from, if my memory serves me well, $1.20 to $50. Which was certainly a dramatic move. I'm not trying to say that I caught the bottom or that I caught the top, but I caught enough of the middle that it attracted my attention and has for the rest of my life. And as dramatic as the moves in silver are, the moves in the silver stocks, possibly because the population of them is so few, is even more extravagant. During that period, the 1970s, one silver stock, Coeur d'Alene Mines, moved from 10 cents to $65. Alas, sadly, without me. But that's okay. Others did fine with it. So I would say that there are, from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. And you have to be, I would suggest, a contrarian. The easy money will be made in silver and the silver stocks simply from the arbitrage between hated and disgusted and unhated, just as we saw in the uranium stocks. The easy money in the uranium juniors happened as a consequence of them becoming simply less hated. And that will happen with silver too. Silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver. First of all, most silver doesn't come out of silver mines. So the supply side is a really interesting conundrum. Of new mine supply, last year, I believe 18% of the new mine supply of silver came from silver mines. The rest came from copper mines, gold mines, and lead and zinc mines. So trying to forecast mine production based on the silver price is a fool's errand, because gold prices and copper prices and lead prices and zinc prices are more important to silver production than silver prices are.
Rick Rule continues his analysis of silver, debunking misconceptions about mining costs and highlighting the unique dynamics of silver production. He emphasizes that most silver comes as a byproduct, minimizing primary production costs. As silver prices rise, recycling becomes more efficient, and above-ground stockpiles, particularly in South Asia, play a significant role in supply dynamics. Rule notes the challenge of understanding above-ground inventories and their availability for sale. Despite these complexities, a current supply deficit indicates strong demand. Silver's industrial applications are rapidly expanding, contributing to its allure as a top asset.
And equating mining costs around primary producers is an illusion too, because those costs only pertain to 18% of mined production. Most silver, as a consequence of it being a byproduct or a co-product, requires, from a mining standpoint, only the processing of the silver stream. The costs are paid for by other metals. So the primary cost of production of silver is often less than people think it is. And as the price of silver rises, the supply rises for two reasons that most people don't consider. The first is recycling. At low silver prices, it is less efficient to recycle. At higher silver prices, it's more efficient to recycle. And the easiest silver to grab is the silver that's already been mined, that is recycled as a consequence of industrial utilization. The second is that the above ground stockpiles of silver are large and almost unknowably large. Silver still represents a store of value, if you will, off official balance sheets, particularly in South Asia, in India, Bangladesh, Pakistan, Sri Lanka. And what you'll find is that when the silver price moves up in US dollar terms, particularly when the US dollar moves up relative to South Asian currencies, that South Asian people tend to dishoard their silver, which is to say they tend to be better silver investors than Americans. They tend to buy it low and sell it high, unlike us, who tend to buy it high and, of course, sell it low. So the supply of silver is very difficult to understand. The demand side can be similarly difficult, although it's important to note that right now at these silver prices, there is a supply deficit, which is to say the amount of silver produced in all sectors, primary production, co-production, and recycling, is substantially less than global consumption for fabrication. It's important to know that. What is unknowable, at least by me, is what the above ground inventories are and where they're available for sale. So the fact that there is a primary deficit, while it's relevant, is a very difficult thing to gauge fundamentally, because most of the supply that's ever been mined still constitutes in some way, shape, or form supply. Silver bulls, if there are any left, other perhaps than myself, should get solace from the fact that industrial utilization and application of silver is growing very rapidly.
Thanks for tuning in to this deep dive into the world of silver with Rick Rule. If you found value in understanding why silver is capturing his attention, don't forget to hit the like button and share your thoughts in the comments below. Remember, silver's unique dynamics make it a compelling opportunity for contrarian investors. Whether you're a seasoned speculator or just starting in the world of finance, navigating the silver market requires a keen understanding of its supply, demand, and historical patterns.